Good afternoon, traders, and welcome to this week's Trader Q&A. And in today's show, we've got a lot of good questions coming about stop losses, stop placement, and also about how to go from becoming an amateur to becoming a professional trader. So I really hope you enjoy some of the questions from today's show. The first one is from a person, a lady. I might get the name. I don't want to get the name right or wrong here. So let's just say a person who's written in to say, do you set your daily stop losses as in a maximum amount of stop loss, which is hit in a day, and then you stop trading for the day? And do you encounter losing weeks frequently? I have a 60% win rate, but I've had 4 losing weeks in the last 9 months. 4 weeks seems like a lot to me, but is having losing weeks normal? So first of all, let's answer the question about the stop losses. Yes, absolutely, I have a daily stop loss. It's one of my sort of like primary risk management tools when day trading. So what I'll do is I'll say to myself, I'm willing to lose 2% of my account in any one particular day. And then I'll take that 2% and I'll chop it up amongst, 6, 7, 8, 9 different positions. So what I can then do is I can then trade without fear throughout the day. So I can take trade after trade after trade up to, let's say, 6 or 7 trades that I will have split my positions into without having to worry about the next trade. And what that allows me to do is be a bit more fluid with my trading throughout the day, but then also know that once I get to my daily stop loss, I've had a good sort of I've had a good attempt at the market for the day, and if I've taken 6 or 7 trades, or I've got to my maximum daily stop loss for the day, then, it might not be that the market is behaving badly, but certainly I may be. And it just kind of protects me from myself. So yes, I do have a daily stop loss, and it's something that, I utilize. Well, not utilize a lot, than I hit it a lot, but it's one of my primary risk management tools. In terms of having losing weeks, if you've only had 4 losing weeks in the last 9 months and you are doing very, very well, losing weeks, they do happen as traders. You try to limit them, of course. As a day trader, you want to come out of each and every day with a profit on the table. That's not always possible, and if you can't do that, then you want to try and end every week with a profitable week. And if that's not always possible, then at least you want to do that every month. But trading is one of those things that we can't control the markets. Okay, so yes, it would be nice to have as few losing days, as few losing weeks as possible, but the reality is that they do happen. And I think if you've only taken 4 losing weeks in the last 9 months, and you're doing very, very well. So, congratulations. Don't change anything you're doing there, because you're obviously doing something right. The only one key that I would say is to make sure that on a losing week, you don't lose, much more than you would on an average winning week. So what you don't want to happen is to have a losing week wipe out all of your profits for the last 6, 7 weeks. That would definitely be a bad thing. Okay, moving on to the next question. We have another one about stop loss. It says, my question is about stop loss placement and stop loss movement. But to put it into context of my trading, I like to trade reversals from areas of resistance, especially on daily and weekly highs, high probability setups, if you will, but also supporting resistance from lower time frames, 5, 10, 16 minutes. I normally try to enter as close to the supporting resistance level as possible, then my default would be at 10 pips. So is 10 pips too little? How quickly do you move it up? Do you leave your stop in till you exit? Should you take the view that if it's going to reverse, then you'll tighten your stop loss? And should you go smaller to get a smaller position size for your stop loss? So first and foremost, what you should never do is just pick an arbitrary number. So it seems like you're just picking 10 pips for the sake of 10 pips. Hopefully you will have measured that against the volatility of the pair that you're trading to see that 10 pips is adequate. Otherwise, you're going to get into a situation where you're putting in an arbitrary stop loss and you keep getting stopped out of the market because the stop's too close for the market that you're trading. So to try and answer your question about is 10 pips too little, it's really impossible to say unless I know what instrument it is that you're trading. Typically, what I would say is put your stop loss a few pips above or below, if you're saying the resistance level, above the resistance level that you're trading from. So maybe 10 pips above that level, even just to give your trade a lot of room to breathe. I'm not one of these people that say, yes, 10 pips just, and don't ever move it and don't do anything with it, because it may not be right for the instrument that you're trading. you might do what I do, which when I'm trading the DAX, I kind of put in a 10 point catastrophic stop loss. But then once I'm in the trade, because I'm trying to get in there very, very quickly, and I don't want to be having to mess around with the stop loss when I'm getting into the trade, I just put in 10 points and that's kind of it. Then once I'm in the trade, then I will look at moving the stop either closer or further away as the technical picture dictates. Okay, so really, when you pick your stop loss, you need to pick it according to where it makes sense technically and not just an arbitrary figure, which then should answer your other question about should you trade a smaller position size and have a larger stop loss. If the position that you're trading dictates that, then absolutely that's what you should do. You know, if you're trading a longer term time frame, 10 pips is never going to be enough. So make your position size significantly smaller and take a larger stop loss. In terms of moving it up or coming out early, you know, moving your stop to break even isn't something I do a great deal. But it's a personal preference. It's not to say there's anything wrong with it. Coming out of a trade early, yes, I do come out of a trade early. If the market looks to be turning around, if it's giving me signals of that, then I will absolutely come out of a position early, if that's what the trade dictates. Okay, so I hope that answers that question for you. The final question of today is from a gentleman who says, nobody often talks about the transition from amateur trader to professional. Most discussions make reference to trading being tax-free in the UK, but rarely delve into the finer detail. You know, what has been communicated literally hundreds of times is that trading is taxable if and when it becomes your main income. Is this correct? What line do you have to cross before it is deemed your main income? Do the profits have to exceed my main income, or is there something else? And then lastly, if I were to use different strategies, could I essentially take more profits out for day-to-day living? And would a strategy be classed as a different business? So I think all of these questions here are around the when is it tax-free and when is it not tax-free. So and this isn't tax advice because I'm not an accountant, okay? We give all of our books to our accountant and they take care of everything for us. But my understanding is that spread betting in the UK, which is tax-free as long as it isn't your main source of income being, and your primary source of income being, you know, the majority of your income, if you like. So I don't think it's got anything to do with how much time you spend doing something. It's more to do with how much profit you derive from there versus other sources. So if that is where you get the majority of your profits from, then I think it becomes your primary income. But as I said, I'm not an accountant. It's something that you need to give to your accountant and they take care of it all for you. And I don't really want to venture into this area because everybody's situation is unique, right? So, and it depends where you're deriving your incomes from and all of that kind of stuff. But what I would say is in the beginning, spread betting absolutely is tax-free. Once you get to a point where you're starting to question whether it should be or it shouldn't be, then that's the point that you need to go across to your accountant and ask them the question. And make sure that you're clear with your accountant what it is that you're talking about, because it took us a while to find an accountant that understood spread betting enough to be able to give us good advice on it and to be able to handle our books in the right way. Because a lot of accountants, and I'm not saying, you know, you if you're an accountant or anybody out there, or let's say a number of accountants we found initially were quite lazy in their response and just went with sort of like the party line of, yes, it's tax-free. But as you've kind of alluded to there, it's not always the case. Okay. In terms of using different strategies for profits from a day-to-day, if we like remove the tax element of that, it's something that we would recommend that you do is have a number of different strategies if you're going to become a full-time trader. Just because it helps to have a bit of a smoother equity curve. You know, you can sort of mitigate your risk a little bit better if you've got different strategies and you don't sort of fall foul to these psychological issues that you have if you've just got the one strategy and that one strategy isn't performing very well for you at a particular period of time. So if you've got a number of different strategies that you can be trading, you'll find that psychologically it's actually a little bit easier to deal with. Okay, so that wraps up all of the questions for this week. We've now got through all of the questions that came in from the email that we sent out a few weeks ago. So if anybody's got any other questions, please feel free to send them in either beneath the video here, the YouTube video that you're watching right now. Post the question or email us at support@traderscorner-online.com. Email us your questions and we will do our best to answer all of them in this show right here. Okay, so I hope you're enjoying it. It seems from the feedback that we've been getting via email and stuff that you really, really are. But please show your appreciation by giving it a thumbs up beneath the video. Subscribe to our channel to make sure that you get all of our updates in a timely manner. Otherwise, thank you very much for watching. Happy trading and have a good week in the markets. Take care.